If you're newly self-employed, health insurance can feel overwhelming. There are too many plans, too many rules, and too many confusing options available for self-employed people. But instead of researching a bunch of different plan types, I'll show you a shortcut to narrow your choices down using a simple bucket method framework. By the end of this video, you'll place yourself into one of these buckets based on your answers. Each bucket has 1 to 3 options, and we'll talk through their pros and cons. Hey, I'm Shami, a healthcare finance consultant, and this channel is all about helping you understand your health insurance to save money. So if that's something you're interested in, please subscribe down below. All right, I'm gonna ask you 3 questions, and your answers to these questions will guide you to the right section in this video. When you reach your answer, I'll tell you which section to jump to, and you can find the timestamps in the description down below to your section. Let's get started. Now, before we continue, I want to share a quick reminder with you that this video is for educational and informational purposes only, and it's not a substitute for advice from an insurance agent, broker, patient navigator, patient advocate, or another qualified health insurance professional. All right. Question number 1 is, did you leave a job within the last 60 days, either voluntarily or involuntarily? If yes, go to the COBRA section. If no, go to question number 2. Question number 2 is, do you want broad medical coverage or do you only need limited insurance protection? By broad medical coverage, I mean the 10 essential health benefits provided by the ACA, which includes inpatient and outpatient hospital care, prescription drug coverage, pregnancy and childbirth, mental health services, and more listed on this screen. If you only need some of them, then go to the insurance light coverage section. But if you want broad medical coverage, let's move on to question number 3 now. Question number 3 is, do you qualify for government insurance programs like Medicaid or military programs like TRICARE or VA? Medicaid usually covers low-income parents, low-income pregnant women, low-income people with disabilities, and low-income older adults. So if that sounds like you, then head to the Medicaid section now. TRICARE covers active duty military members, retired service members, National Guard Reserve members, and their families, while the VA covers many veterans. So if either of these applies to you, then go to the military program section. If neither Medicaid nor military programs applies to you, then go to the Marketplace plan section. See you in your section soon. All right, COBRA group, welcome to your section. Let's first talk about what COBRA actually means for a second, and then jump into the pros and cons. I want you to imagine that this bottle represents your health insurance premium, and that the blue marbles in this cup represent what you pay towards your health insurance premium, and that the red marbles in this cup represent what your employer pays towards your health insurance premium. So when you're employed, both you and your employer contribute towards your health insurance premium. But most people tend to only notice the blue part because that's what's deducted from their paycheck. But when you leave your job and go solo with your career, the cup with red marbles disappears, and you have to fill the whole jar with blue marbles by yourself. And that's what COBRA is in simple terms. You get to keep the same health insurance plan you had when you're employed, but now you pay the entire premium by yourself without the help of your employer. The pros of COBRA is that it's convenient for continuity because you get to keep the same plan for up to 18 months. It may also help if you've already met your deductible or if you've hit your out-of-pocket max so that you're paying less in out-of-pocket expenses. It can also help if you're currently receiving treatment and don't want to change doctors. But the con is that COBRA is expensive for many people, and plans typically cost around $400 to $700 monthly. Long story short, COBRA isn't about saving money for you, it's about consistency and convenience, which can be helpful during transitions. If COBRA feels too expensive for you, but you still want broad coverage, check out the Medicaid section in the timestamps below if you qualify, or check the Marketplace insurance section in the timestamps below as well. Thank you so much for watching, and I hope this helped. If you're here in this section, you want protection and lower premiums, But you're not looking for a plan that covers a broad range of services, such as Marketplace plans, which are required to cover the 10 essential benefits required by the Affordable Care Act. Think of ACA compliant plans like this chocolate bar, with each square representing covered medical services like maternity care, prescription drug care, hospital care, and more. There are more than 10 squares in this bar, but you get the idea. What I like to call insurance light coverage removes some of these squares. So you still have some protection, but you have fewer benefits, and that's why their premiums are cheaper. But if you need treatment that isn't covered by these plans, you're responsible for covering these costs on your own, which can become very expensive. Let's look at 3 examples of these plans now. First up is short-term insurance. Short-term plans fill temporary coverage gaps. Their initial terms are usually 3 months long, but they may last up to 3 years in some states. They usually cover things like doctor's visits, urgent care, and emergencies, and you can cancel any time without penalty. But they are not ACA compliant plans, which is how they're cheaper, because they don't have to cover the 10 essential health benefits required by the Affordable Care Act. They may also require health screenings and deny coverage based on history. 14 states currently ban these plans because coverage is considered too limited. So if you do choose this option, then read the exclusions and limitations carefully. Next up are catastrophic plans. Now, catastrophic plans are ACA compliant because they do cover the 10 essential health benefits, but they're for worst case scenario protection because they have very low premiums but extremely high deductibles. So insurance usually only starts paying after something catastrophic starts happening, which means that these plans are not ideal for everyday routine healthcare visits. However, they still cover 3 primary care visits yearly before you meet your deductible, and they also cover preventative services at no additional cost to you. Eligibility for these plans is limited to people under 30 or people with financial hardship exemptions. For young, healthy entrepreneurs, this might be temporary coverage you're looking for until you can afford more broad coverage. And last but not least of our insurance light plans are healthcare sharing ministries. But it's a bit of a misnomer because healthcare sharing ministries are not actually health insurance. But they do help cover healthcare expenses with members who share similar beliefs, contributing money into a pool that helps pay for medical expenses. The pros of these programs are that they're often cheaper than traditional insurance plan, and they also provide a shared sense of community with people who have shared values. But the cons of these programs is that they are not regulated like traditional health insurance plans are, and there is no legal guarantee that your bills will be paid. Covered services and rules are also determined by the ministry and not by insurance laws. Thanks for watching Insurance Light Group, and I hope this helped. Medicaid Group. Let's first start off with a quick background on Medicaid and then jump into the pros and cons. I want you to imagine that this jar represents healthcare costs, with the blue marbles representing the federal government and the state government, filling almost the entire jar, meaning they're basically funding the entire program. Now, the red marbles in my hand represent a small amount you might have to pay in out-of-pocket costs or premiums, or sometimes you'll pay nothing depending on your income. And that's exactly what makes Medicaid so affordable because, as you can see, most of it is funded by your federal and state government. Medicaid covers hospital visits, doctor's visits, lab tests, x-rays, and home health services, amongst other services. States that have chosen to expand Medicaid, which include 41 states plus the District of Columbia, have chosen to provide extra services like physical therapy and occupational therapy, amongst others. Eligibility varies by state and depends on your income and family size. Adults in states that have expanded Medicaid qualify if their income is below 138% of the federal poverty level, which is $22,025 a year for one person, or $45,540 for a family of 4 in 2026. In states that have not expanded Medicaid, child-free adults are usually excluded, but the core eligibility groups like low-income pregnant women, low-income people with disabilities, and low-income older adults 65 plus are still included. Parents making up to 40% of the federal poverty level are still included as well. The pros include very low costs and broad medical protection, but the cons are the strict eligibility limits and fewer providers accepting Medicaid than other types of insurance. If you're starting your own business and your income is still relatively low, Medicaid may be the most affordable option for you. Thank you so much for watching, and I hope this helped. Hello, military program groups. Now, I've already reviewed the eligibility for TRICARE and VA in the intro, so if you need a refresher on that, then head back to the beginning of this video. But for now, let's jump into a quick background on these programs and then discuss their pros and cons. Now, I want you to imagine that this glass represents the healthcare costs of VA and TRICARE, with the blue marbles representing the federal government dollars that are basically entirely funding this program. Now, the red marbles in my hand here represent what you might have to pay in small copays to receive care. And that's why these military programs are so affordable if you qualify, because most of it is provided for by the federal government. Coverage includes hospital visits, doctor's appointments, prescriptions, mental health care, and sometimes even vision and dental if you meet their eligibility requirements. Pros include very little costs and broad medical coverage, while cons include using approved providers that accept TRICARE and VA. Also, plans for TRICARE vary by service status, and for the VA, the full list of covered benefits you qualify for depend on your priority group, the advice of your VA primary care doctors, and the medical standards for treating any health condition you may have. Thank you so much for watching, and I hope this helped. Hello, Marketplace Insurance Group. If you've reached this section, then you want broad coverage, but you don't qualify for government programs, so your main option is buying on the health exchange. Let's discuss the plan costs and jump into the pros and cons. Imagine this jar represents premium costs, and the blue marbles represent what you pay, and the red marbles represent what the government pays in terms of subsidies called premium tax credits. These credits reduce the portion of premiums that you pay so that this entire jar isn't just filled with blue marbles. Subsidies are based on income, and eligibility is typically between 100 and 400% of the federal poverty level. Self-employed people may also receive an additional tax deduction benefit where you can deduct premiums from your adjusted gross income, which lowers your overall tax bill. Pros of Marketplace plans include making them more affordable with subsidies and a coverage of the 10 essential health benefits required by the Affordable Care Act. Cons include limited plan choices to Marketplace plans and higher premiums without these subsidies if you don't qualify for them. Enrollment is limited to the open enrollment period between November and January, or special enrollment periods for qualifying life events like getting married, having a baby, or losing other coverage. Check out my video on how to get health insurance outside of open enrollment for more information. If you made it this far today, I want to thank you so much for watching. I know health insurance can feel complicated, but frameworks like these can make making decisions easier if you're self-employed. Let me know in the comments down below what topics you want me to cover in the future, and thanks again for watching, and I'll see you in the next video.